A very good morning to everyone and welcome to the DEInvest Annual Survey 2025. It's a beautiful sunny morning in Johannesburg and thank you so much for joining us, and we are broadcasting live from the JSE studios in Sandton. My name is Ndii Manzini, and on behalf of 274, it's a privilege to host you this morning. Whether you're joining us on Zoom, YouTube, or whether watching the replay later, you are warmly welcome. The DEInvest Annual Survey is an evolution of research that began in 2009 under the name BEconomics. It was a first of its kind study which mapped out the transformation in the South African asset management industry. Over this history, the data and the intelligence, this work has in depth and enriched. And today, as DEInvest, it continues to really track the progress, the performance, and the inclusion shaping our industry. This morning, we will walk you through the key findings of our 2025 DEInvest survey, followed by two important conversations. First, we will dive deep into the team building up the research, who will unpack the insights and the trends behind this year's results. Secondly, we will then look at the winners of this year's 2025 DEI Index Awards. The firms that really were leading and showcased that they can be an example in terms of diversity, equity, and inclusion. Thank you to everyone for joining us from across the world, the country, and beyond. Your continued engagement is what really keeps the conversation alive. And now, to begin our program for this morning, let's take a closer look at the story behind this year's data. Please hold as we look into the 2025 DEInvest key findings.
The South African asset management industry stands at a pivotal moment. Transformation is deepening, market structure is shifting, and a new generation of managers is reshaping its future. Welcome to the 2025 edition of the DEInvest Survey, South Africa's definitive benchmark on transformation and industry trends in asset management. Now in its 17th year, the DEInvest Survey is the industry's barometer of change, tracking asset management's role in driving inclusive growth, innovation, and investment. Over the next few minutes, we'll unpack the data and spotlight key shifts shaping the industry's next chapter. South Africa's asset management industry continues to demonstrate remarkable scale and depth, cementing its position as one of the most sophisticated markets on the continent. This year's survey covers 93 asset managers, overseeing a combined 6.8 trillion rand in assets under management. The market is anchored by institutional investors who hold 4.4 trillion rand in assets, alongside a significant retail segment of 2.4 trillion rand. The industry remains highly concentrated. The top 20 managers control almost 90% of total assets, but a vibrant cohort of emerging managers is bringing specialization, innovation, and fresh competition to the landscape. Public markets remain the backbone of the industry, accounting for 93% of total assets under management. But private markets are steadily gaining ground, now at 7% and rising from a low base in previous years. For the first time, private equity, infrastructure, and private credit feature among the industry's top 5 investment strategies by AUM. This marks a structural shift towards greater diversification and real economy exposure. This shift is being propelled by retirement funds, development finance institutions, the private sector, and government, channeling capital into the green and digital economy, healthcare, manufacturing, and other growth sectors. So where is the money invested geographically? The industry remains largely domestic in focus, with around 75% of assets invested within South Africa. A further 23% is allocated offshore, concentrated in listed equity and fixed income, reflecting a strong preference for liquid, developed markets. Only 2% of assets are invested elsewhere on the continent. Structural shifts are reshaping South Africa's asset management industry. Corporate activity has intensified, signaling a period of strategic repositioning as firms refine their business models and sharpen their competitive edge. Landmark transactions, including Sanlam's partnership with 91 and Coronation's BBEE deal, illustrate both consolidation and transformation at scale. This trend extends to mid-size firms, as seen in the merger of Vunani Fund Managers and Sentio Capital. At the same time, local managers are building alliances with offshore asset managers, drawing on global expertise, product innovation, and distribution networks. These developments are reshaping competitive dynamics and positioning the industry for a more globally integrated future. Transformation is firmly embedded across South Africa's asset management industry. 71% of firms are Level 1 BBEE, 74% are majority Black-owned, 21% are majority women-owned, reflecting continued progress in ownership diversity. At governance level, 73% of boards hold a majority of Black members. Over half of all boards include at least 40% women, strengthening diversity in decision-making. At the executive level, Black CEOs and managing partners hold a clear majority, and women now lead a quarter of firms. On pay equity, racial parity is almost universal, with 99% of firms reporting equal pay between Black and white employees. Gender pay parity stands at 89% of firms. The industry employs 5,418 full-time employees, with 96% being South African citizens. Women represent 52% of the total workforce. At the senior investment leadership level, Black chief investment officers make up 61% of the industry, but women remain underrepresented, holding just 20% of these roles. When it comes to who manages the money, Black professionals play a leading role across the industry. For women portfolio managers, representation remains limited. Positively, transformation within the workforce continues to deepen. Women are building a strong presence at analyst levels, and African women in particular are forming a growing pipeline of future investment leaders. But gaps remain. Diversity is concentrated in support functions, creating the risk of a transformation silo, where diversity is visible in the back office, but less so in capital allocation and decision-making roles. The 27-4 DEI Index is South Africa's definitive benchmark for transformation in asset management. It measures progress across 5 key pillars: ownership, representation, equity, impact, and governance. The index is more than a scorecard. It offers a standardized framework for managers to assess performance, benchmark against peers, and adopt best practices. It also enables investors to evaluate managers on DEI criteria, ensuring that transformation is embedded in capital allocation decisions. With growing evidence that diverse teams deliver stronger financial outcomes, DEI has become both a social imperative and an economic driver. Importantly, leadership on DEI is not determined by firm size, but by focus, commitment, and disciplined execution. This year's leaders reflect both continuity and fresh competition. The 2025 DEInvest Survey reveals an industry at an inflection point, where scale meets transformation, where private markets meet innovation, and where DEI moves from intent to measurable impact. Download the full report at 274.com and join us in shaping an industry that delivers both return on investment and impact. 27-4, investing for a transformed future.
Morning, everyone. It's such a privilege to be joined by my colleagues here today, Yumna, Rory, and Fatima, as we finally, with great excitement, get the opportunity to be able to discuss this report that everybody has really been working hard on, not only from the fund manager's side, where they've been submitting the information that we've been able to use, but this is, I don't know if many of you know, the 17th time that we've actually done this survey, and we've seen the evolution of the data, and we've evolved this report from being one focused on just Black asset managers to diversity, equity, and inclusion a lot more broadly. And it's with that kind of in mind that I wanted to kind of start with you, Fatima. You mentioned in the report, as you said, 17th report, 2025. that specifically this edition has got kind of described by it being a pivotal turning point within the industry. So what do you think has been some of the most kind of defining shifts that have happened, that we're taking from this report?
Yeah, thanks, Made. As you mentioned, this is our 17th edition. So over the years, we've analyzed a lot of data, and we've interrogated a lot of data and interpreted a lot of data. And what that allows us to do is actually understand and get to the bottom of the trends that are shaping South Africa's asset management industry. And so for the first time this year, there were a number of things that really stood out. One, the high level of corporate activity. We've never witnessed so much corporate activity as we saw in this last reporting year. We saw a jump from 4% to 17% of total participants having participated in some form of corporate activity. The other point that also surfaced was the number of very well-known global brands forging partnerships with domestic asset managers. And as South Africa, we one of the biggest pools of capital in the global south, so you can understand that. But you've got to sit back and reflect and say, well, why are we seeing this consolidation? And also, why are we seeing this increase in global partnerships with domestic firms? And it all comes down to distribution. It comes down to scale. It comes down to skill. It comes down to technology, cost efficiencies, operational efficiencies. And some of those deals were mentioned in the video clip that we talked about. But there was a lot more outside of those deals. So consolidation is happening in the industry. We're also living through a technology revolution that none of us have experienced before. And as I was saying, we were chatting earlier, every day you come in and there's a new tool that's available to enhance, whether it's risk management or compliance or your investment process or writing reports. And how do we actually integrate that into our skill set? How do we make it work for us as the asset management industry? So we're seeing a lot of that coming through. Then also, as was apparent in the video clip, and that you guys will talk about later on, is a focus on the real economy in South Africa. And we're seeing asset allocators talk more about the real economy, but not only talk more about the real economy, actually allocate assets towards the real economy. And given where South Africa is in its trajectory, I think focusing on the real economy makes sense. Lastly, transformation has become, it's not the way we saw transformation 20 years ago, 15 years ago, even 5 years ago. Being transformed is a competitive advantage. If you're a transformed business, and transformation is not about numbers anymore, Black ownership, Black participation is well entrenched. We're now in that second phase of transformation and really looking at inclusion, impact. And I think when we talk later about the DEI index, I'll unpack some of those issues for you. But where are we now as an industry? I think we're rapidly digitizing, we're globalizing, we're transforming. It's an exciting time, and the results clearly indicate that.
Yeah, it's definitely an exciting time, and I wanted to kind of focus on the private markets comment that you were making around, in the survey results, we're specifically seeing that of AUM, industry AUM, private markets is now 7% of AUM. And it's also one of the top 5 investment strategies that investors are pursuing. So maybe a question to you, Rory, just, why do you think that shift is happening, and how are investors thinking about it? Why is it becoming such a dominant kind of theme within the market, and, from an asset allocator perspective, such a big interest and increased interest?
Yeah, so this shift into private markets and the shift of the total asset allocators allocation towards private markets is something that's part of this huge global trend that's been happening over the past 25 years. So even though the first sort of private equity funds and private equity firms came up in even the 60s, 70s, 80s in the US, we saw that it was a sort of slow traction coming into the institutional space. You saw the adoption of American endowments, family offices, that sort of thing, the more adventurous types of investors starting to bring these sorts of things into their portfolios through the latter part of the last century. But it's really since the turn of the century, so after kind of in the wake of the dot-com burst, that you started to see a lot more focus on diversification and finding different sources of return. So if you look at the way that global institutions started to allocate, and you look at the numbers, I think we're in the lucky position now where we've got enough kind of time and enough perspective that we can look back on that period and see this mega trend that's been in place in this shift into private markets. So if you go back to that time and even look at the global numbers from the year 2000 to this 25-year period, the numbers are absolutely incredible. There's been an enormous shift in percentages and absolute sort of dollar amounts that have gone into the private market space. And what that's allowed is for not, I think there was a time kind of when the word private markets and private equity were almost synonymous. But what we've seen over time is a lot more specialization, a lot more segmenting of what the private market space really means. So, I think the classic private equity fund was a buyout fund, use lots of debt, bit of equity, and try and make some money from a company. But now we've got, at least sort of 10 sub-strategies that are happening globally, making up the private market space. In South Africa, we've been slightly slower to adopt. We had some early adopters coming in through the time I've just been talking about. But in general, it's really only been kind of after the 2011 shift and the change in Regulation 28 that brought private equity and private markets more onto the table and onto the agenda for most of our asset owners in South Africa, that you started to see that full consideration happening. And I think, if we think back to that time, there was probably less than 1% of our institutional assets were going into the space. And so while the 7% that we're talking about in the survey might seem like a small slice, if you look at where we've come from and how the assets overall have grown also, it's actually been a phenomenal shift. And the driver, to come back to your question, the driver of this has all been asset owners looking for different sources of return, realizing that they can't only look at the listed markets and they can't only look at also kind of the traditional asset classes. They need to expand and look for other sources of return that can help to diversify their investment bases and ultimately give better returns for their members.
Yeah. There's an element of economic impact, right, and real impact that I think we as South Africans are craving within the economy in which we operate. And I think there's some responsibility almost given to private markets to be some, more of a catalytic driver to some of that real impact. So maybe, talk to us about how you see, private markets playing that role. How can they actually be catalytic? How are they doing in terms of product types and so forth that are really creating jobs? And is it reasonable expectation of us to have relative to private markets?
I think if you compare the way investment works in the listed space, you're trading secondary transactions. So it's one shareholder trading shares with another shareholder, one bondholder trading shares with another bondholder. Most of the activity is happening in the secondary market, which doesn't actually affect the companies that much. It's a relatively small part of the markets that it's new capital raises, particularly in South Africa. When we look at the private market space, there's much more of the situation where we're actually putting capital into companies for growth. And that's kind of so just that act of actually investing real money into companies that are operating in the real economy in South Africa is impactful on its own, just because of the growth angle. What you can layer onto that, and what institutional investors are really recognizing, is that because of the way that you can invest in private markets and have a lot of influence in the companies and have a lot of influence in the way that your actual investment capital is allocated, you can start to bring in other impact elements. So in South Africa, number one and two that we see on the agenda is jobs and transformation. And both of those elements can be really effectively dealt with, and you can actually move the needle on both of those elements by investing through the private markets. So this is something that we've seen really practically in our portfolios at 27.4. As the private markets have grown and expanded, and you've actually enhanced your ability as an institutional investor to invest into a whole range of companies, from quite small companies, SMEs, we even do work in the township economy, to relatively large unlisted companies. As you've got that whole spectrum in place, you have the ability to create jobs, and we've seen that happen really effectively, and also to implement transformation plans through those investments.
Yeah, I think one of the other things that you mentioned in your previous answers was this, private markets effectively evolving to, its sub-niches, right? And that takes us to private credit, and kind of you being a specialist in that space. We've seen this evolution in the data through the report and through the survey that, there are a lot of fund managers coming into the space, raising massive funds in excess of 3 billion. So we've definitely seen real momentum within the private credit space. What do you think is, driving that, and what has that private credit evolution looked like over the last few years?
If I can start, thanks, Made, and greetings to everyone joining us online. If I can start by saying that, private credit has grown significantly in the market and can be seen as one of the most dynamic segments within the South African investment landscape. If we just look at in 2025, the growth, the credit extension to the private sector grew by about 5.86% year on year, which is the fastest pace in the last 2 years, while your broad money supply reached over 5.6 trillion, according to the Reserve Bank. So behind these numbers, we can actually see that there's been a structural shift in how capital is being supplied. So focusing on what's been driving this. So if we look at firstly the banking sector. So the banking sector or banking lending capacity has been squeezed quite a bit post-crisis regulations. So under the Basel III framework, South African banks are now required or must maintain around 13.5% in capital adequacy on the risk-weighted assets. So loans to your mid-sized and underrated companies require higher charges, results or reduces, your institutional or not institutional, your traditional lenders' willingness or incentive to participate in this underserved sector. And then you add liquidity coverage, leverage buffers, and it simply results in your banks not being able to compete with the private credit fund's flexibility that it can provide. So generally, if you look at companies specifically that are trading stably, positive cash flows, but lack that hard collateral, they're looking at private credit as a primary route for growth finance. And the market activity illustrates that defaulting debt and mezz capital is not, mezz deals, is not necessarily all that private credit is encompassing. It's spreading across senior secured loans. We're looking at asset finance, we're looking at growth capital, and even to an extent, we're looking at portfolio level refinancing. And then another factor that I think is important is the macroeconomic conditions that has played to the advantage of private credit, where higher interest rates has caused investors to be more selective in the products that they're choosing. And then you look at your floating rate credit, which private credit provides. It provides that inflation protection that a listed bond doesn't necessarily match. So, if we look at for pension funds and long-term allocators, the stable flow and the inflation-linked yield looks attractive when you're looking at times where listed markets remain volatile. Yeah, and that's basically, to me, where I see the main drivers.
And I want to come back to this point which we touched on previously, this economy that really needs funding for growth, right? And you've mentioned how private credit is a perfect instrument to also be able to play its role in funding that growth, right? Beyond the traditional kind of banking environment. So I think in your kind of, understanding and the role that 27.4 is also playing within private markets, how would you kind of, see private credit as an instrument to, serve the underserved market, the mid-market companies that require growth capital, the black entrepreneurs, that are so fundamental in terms of driving the growth that we all seek, within the South African economy?
I think this is where things become truly exciting for an inclusive
private credit exciting.
For inclusive economic growth, because if you can picture your mid-size and black-owned businesses operating across South Africa, where they are operating profitably, they're ambitious, but they're unseen by your traditional banks. Why? Because they are not ticking the collateral box or the historic rating boxes. And it's been seen, and Rory mentioned, the private markets and private credit specifically, when executed with discipline, I think we can change this story.
So I think that the bottom line of some of what I've kind of heard from especially the two of you in terms of the role that private markets can kind of serve is really that impact element is so important. The fact that you can think kind of more innovatively about how you can solve for the various funding mechanisms that are available within our economy in order to drive that. And we're seeing the market respond to that, specifically in order to, and in terms of the increased allocations from the capital allocators. I wanted to end off with the last question to you, Fatima. And, it's such an important evolution that has happened over the last while, within the way in which we compile our survey. It used to be BE.economics. Now it's specifically DEInvest. And kind of a fundamental part of that is this DEI index, which, I must admit you were the brainchild of in terms of even how we look at it. But it's the second year, and all of a sudden now we've got data to compare against. We've got set the baseline last year. Now we're in the second year of it. We can see the evolution. So maybe just, from your kind of, understanding and analysis of all the information that have been submitted by the market, how have you seen the, evolution against the index and the role that it's been playing in, setting that framework and benchmark again for looking at it beyond transformation and more diversity, equity and inclusion?
Yeah, absolutely. So I just want to come back to, and I'll talk about the index, but I want to come back to the South African asset management ecosystem. It's a real paradox of two parts. There's these, if you look at the survey, the video clip showed that we've got the top 20 asset managers controlling 90% of the assets, and then we've got this long tail of smaller asset managers, and the belly of this whole curve should be bigger, and we're focusing on that. But the DI index is, size doesn't matter, and we focus on 5 key elements. And the main reason for the establishment of the index was, in my opinion, the BBB codes are outdated. South Africa has come such a long way when we talk about transformation. We should be looking at transformation with an entirely different lens, and that's why we established the DI index. So the DI index focuses on 5 key elements. So ownership, yes, representation, but we look at equity, we look at impact, we look at policies and governance, and we look at all these different elements. Yes, some of the data is very factual, but other parts of the data really speaks to the culture of an organization, speaks to how organizations are shifting the needle with regards to diversity, equity, and inclusion. So when we looked at the results of last year versus this year, and to be quite honest, over the past 17 years, in fact, was BBBE from an ownership perspective, when we're talking race, is very, very well entrenched in the entire asset management industry. That conversation is now gone, and we should stop talking about racial transformation. The unevenness and the fragility really exists when we come to gender representation, but we have seen significant progress in our own market, but also when we compare it on a relative basis to global markets. So from last year, we've seen an increase in ownership participation by women. We've seen an increase in women playing more significant roles within the industry, at portfolio management role, at analyst role, etc. We do still have a long way to go because women represent over 50% of the industry, but yet when it comes to managing assets, manage less than 30% of the assets. So those are just the numbers which the industry tends to focus on when it comes to diversity, equity, inclusion, its representation and ownership. But for me, the real meat is in policies and governance. So if you adopt the right policies within your organization, you're going to deal with the challenges that people talk about. For example, pay equity, career progression, dealing with retention of people, the hiring of people, and all of those things can be solved through policies and governance. And we evaluate company policies in a lot of depth to understand issues such as maternity leave, sexual harassment, how decisions get made with regards to career advancement. And that's where we see the fragility and the unevenness come through, not in the big data, but there in terms of how organizations are actually run. So only 50% of our participants actually submitted their policies. And when we interrogated their policies, only a few actually passed our threshold of having policies that we would consider fair when it comes to people and really inclusive if you think about what is required for an organization to embrace DEI. And I think the winners of the awards that will come on later did fairly well with regards to scoring against the index. But I think it's fantastic data, and it's not a mirror, it's a compass. It provides us with direction in terms of where we are going. So yeah, we're quite excited, and I think over the next couple of years we'll build more data and really be able to sit here one day and say, we've sorted our black problem, but we've sorted the gender problem as well. And maybe we don't need all of these policies anymore.
And then we'll innovate with something else. We'll know what we'll call the DEInvest.
Absolutely, absolutely.
So this is a really insightful conversation. So thankful to everybody that kind of participated. I would really implore everybody in the audience to go to our website, 274.com. Please download. There's a lot of interesting, information in here, a lot of learnings, a lot of benchmarks that are being set in order for all of us to kind of implement within our organizations and grow from. Next up will be the announcement of the winners of the DEI Index Leadership Awards. There will be a short video. Please don't leave your seats. Stay tuned. We're just going to do a bit of a changeover to the next panel. Thank you very much.
In the greater than 100 billion rand category, Old Mutual Investment Group sets the benchmark once again, winning for the second consecutive year. In the 30 to 100 billion rand category, Argon Asset Management takes the lead. In the 10 to 30 billion rand category, Perpetua Investment Managers retains its top position, reinforcing its consistent leadership. And in the sub 10 billion rand category, the most competitive segment, Raindance Asset Management emerges as the top performer.
Good morning and welcome to our Winners Circle for the 2074 DEI Annual Survey for 2025. This morning, I'm joined by our winners, the Winners Circle panel, which highlights some of the winners of our 2025 Annual Survey of the DEI Index. So this morning, I'm joined by Gareng Sibole. She currently is the founder and CIO of Raindance Asset Management. I'm also joined by the veteran, Dr. Manas Bapela, of CEO of Argon Asset Management. And then I'm also joined by, from Perpetua Investment Managers, I'm joined by Lonwabo Maqubela, who joins us this morning as one of the recipients and winners of this year's awards. And then lastly, but not least, I'm joined by our client director, Onele Ogwana, who currently is a client director at OMIG. Thank you very much, gentlemen and lady, for joining me this morning.
Thank you.
Maybe just to commence with the discussion this morning, I just want to particularly start with Ngareng. Last year we celebrated 30 years of democracy, but just zooming into the South African asset management industry, there's still a lot of hurdles that we still need to overcome, particularly gender representation at portfolio management level and an executive level, as our previous panel had highlighted. Maybe just commenting with yourself, Ngadeng, having started Rain Dance, very newborn relative to our other panelists this morning, how has DEI particularly been instrumental, particularly in founding Rain Dance, and what were some of the important pillars and inputs that you wanted to showcase, having had close to 20 years experience within the financial services sector?
Thank you. Thanks very much, Akona. And I just do want to say thank you again for the award from 274 and the recognition. And I think in answering your question, that recognition has been key in getting us to this point where we are today. Because it just then creates a tailwind behind the business, because your name is now out there, they're starting to know you, they want to start having conversations. But in founding the business, some of the thinking behind it and the knowledge actually was that we know there is huge support, it is legislated that you need to start hiring differently. And I have seen it for myself because it makes so much sense when we're sitting and interviewing candidates. It's very natural for me to gravitate towards looking for a black female because you tend to just hire something that you recognize and you can relate to it. And I can again see how the industry ended up looking the way it did, which was dominated by white males. They ended up just hiring what looked like them. And you had to legislate that you just have to hire differently now. And that's been the huge support, and one of the things that made me believe that this can be done, because you will find support out there, and it's important to then start building an industry that is representative of your demographic in the country. And that's been key for us.
Yeah, no, thanks for that, Garing. And I think just moving to you, Lonwabo, Garing obviously talking about her leadership in terms of an experience and what she saw coming from her prior experience, particularly in the financial services sector. But how, particularly Perpetua, obviously winning this award for the second time, but how has leadership been pivotal, particularly in just driving DEI? We know obviously Delphine Governor founded Perpetua just over 10 years ago, but how has leadership, particularly within the organization, enabled you guys to win this award again in 2025?
Yeah, no, thanks very much. And again, I also echo the same sentiments. Thank you for the recognition and the award. And I'd say, the role of leadership, I think in any organization, and with regards to anything, is firstly to set the vision, and I think that's where, and I would definitely say with Logan and Delphine having founded the vision, that was the business was that a big part of the reason was we could see that the industry needed to move from asset management 1.0, which was the life companies, to 2.0, which were the boutiques, which had now become large, and now there was 3.0 coming. And in our minds, it was a case of, well, what does 3.0 look like? And we felt actually what was lacking in the industry was, yes, scaled boutiques that come to size, but actually having cognitive diversity. And actually because it results in good outcomes for clients. And we felt that was quite an important aspect. And in fact, I'd say was the key reason that we would have left, our previous employers, because we saw this opportunity to then create these diverse businesses that can result in better outcomes for clients. I think another key role of then leadership is then to set the culture, and we also had to understand, well, what kind of culture are we trying to build, and I'd maybe highlight, as actually we have 3 values at Perpetua, but I'll highlight 2 of them. The one is courage, you know, and the other one is care. And courage was really being around, having the courage to do things. You might, a lot of the times you think to yourselves, yeah, but you know, we're a asset manager of such and such a size, what right do we have? So we've said in our values, we've said courage is one of them. And so even though we might think we're punching above our weight in this respect, we will do our best to do so. I'd say then care is really care for each other, so as colleagues, you know, and hence, you know, so things like fair pay, etc., then start to come in, but then care to do a good job for the clients as well, being a key driver of the business. So I'd say those are probably the two, you know, I'll just highlight those two where leadership can play a role.
Yeah. Just continuing with leadership, and I think moving to yourself, Dr. Manas, you've been heading up and steering a ship, particularly Argon Asset Management, for just over a decade. And yes, we're talking about leadership, but I think you guys are the first time to receive this award, the DI Index Award.
Yeah.
But I'm sure it's not something that has taken 12 months for you guys to obviously win this award. But being and steering the ship for quite a long time, what has changed and what has evolved, particularly within the organization, to get you to this point, and maybe just some of the learnings of what you want the next generation and the next leaders, particularly for Argon, to focus on going forward?
Thanks, Akona. And yeah, again, I echo sentiments of my colleagues here. We are grateful and humbled by the award. It's certainly going to serve as an impetus for us to do more going forward. And I'll probably even start with what Lonabo mentioned, you know, the issue of organizational culture. I think it's often not emphasized enough. We all know that culture is a strategy for breakfast. And it sounds like a cliche. We've seen it happening in so many places, industry, big firms, small firms. So getting that organizational culture is key. For us, you know, back to your question, circling back to that, it's not so much on what has changed, it's more an evolution. It has been a journey, learning almost like AI, learning from you know, past occurrences and all those as we go along. Recognizing that getting the culture right is key, getting the values. You know, we often, again, have a tagline among some of our taglines saying values create value. So, and that I mentioned last night that one of the things for us was to do was, what does it mean to have the values that make sense at the organization? Yes, you have two options, or maybe more than that. You can do top down and say, these are the values that I want you guys to subscribe to. And what stops another, you know, a colleague, and you'll bear with me, I struggle to say employees at Argon, because as part of our culture, for me, we're all just colleagues with different responsibilities. What will stop a colleague from saying, why do you want me to be held to account to a particular value? So we recognize that as part of our people's program, again, being intentional through our collaborative leadership, which is something very key I subscribe to. We said, how do you actually look into the whole values that we've always subscribed to as a firm and overall those? So we went on a 2-day symposium with everyone, and by that I mean all colleagues, from the lady who welcomes our visitors, make tea, make coffee, to all senior executives, and say, let's all go there. We are all going to be colleagues, just with different responsibilities, and start with a set of values and co-create what we refer to as what are our current 4 core values. One of which is the one that is taken for granted often, Ubuntu, among the other 3. And for us, that's key because without that, making sure that the center holds, make sure that we have the governing body, the board that makes sense, so that those values, the issues, matters of DEI, those cascade through to the board. Again, firms of our size, to have subcommittees of the board that allow for that leadership I'm talking to. So really this has been a journey, strengthening governance. We have social and ethics committees, subcommittee of the board. A firm of our size, that sounds like an overkill. But these matters we are here about, they need to cascade through to the board, and you need the right structure. And for you to call that subcommittee SEC, I always say to our stakeholders, it must comply with the Companies Act. So it's a big ask, and we were prepared to do that. So all these things were held accountable by the board through the SEC, subcommittee of the board. So leadership, again, I can't emphasize that more than enough. As a leader through collaborative leadership, you make sure that your direct reports, you look at them as leaders you're grooming. So create team-based processes. Anyone in our equities team, as you'll know, can be the head of equities anytime. Graduate trainees that we groomed, again, one of them is head of multi-asset class now. From humble beginning, he's a thought leader at conferences, so you need to be intentional with your leadership. I know I did an overkill on it because that's close to my heart.
Thanks very much, Dr. Manis. Moving to yourself, Onele, since the inauguration of the new US administration earlier this year, there has been notable legal and policy changes, particularly to DEI. And many have felt it's an attack, particularly to DEI, where we've seen some of the largest asset managers very much take a step back, and a lot of companies from the tech and many other global companies just taking a step back in some of the DEI initiatives that they have commenced, particularly for a number of years. As one of South Africa's largest asset managers, and winner of last year's inaugural DEI Index Award, but also being the recipient for a second year. I just want to ask, what has been the focus internally, and what are some of the structures that OMIG has been able to put in place in able to maintaining particularly this position for the last 2 years?
2 years, yeah. Thanks a lot, Akona. And also, I think firstly, congratulations on being Mrs. Nzamela. Must say that. And then also, I think also thanks to the team at 274 for actually fostering this initiative. I think it helps our clients to frame a lot in terms of assessing transformation in DEI across the different firms and industries. I think with legislation and changes, what sort of like helps you as an asset manager is what motivates you to do what you do. With us at OMIG, we believe that a transformed asset management industry that adhere to the demographics of the population can actually understand the unique needs of our clients. So that's what motivates us. What our clients want, what is right for the country, and what's right for the country might not necessarily be what is on the legislations and the uniqueness for our clients. So that's the first thing. And then we have a transformation committee that is an oversight function, and that is the committee is a representative of all the staffs within OMIG. So there's people from IT, operations, finance, and the client groups and the investment teams that are represented there. So we get feedback from the different community within Old Mutual. But there's 5 pillars to our transformation strategy, and we're very intentional about it. I mean, this word intentionality is very important. And what's important to us is, one, the leadership, the people that are leading the ship. So we need to have transformed and diversity in the leadership. And the important part about it is there's the notion of having role models within the organization. It is very different if you're a graduate or a female graduate that comes into an organization, and in the team that you're in, the head is a man, the people in the leadership and the CEO, and you don't see other women that have made it in the industry. So you need those role models. And the leadership responsibility, amongst other things that have been mentioned, is that to be role models to the other people in the business. And then the second part is investment professionals. And we've elevated the investment professionals to be more than just a percentage, and having people as key decision makers. I mean, we had the stats yesterday that women are thriving on the analyst roles, but we actually want to see women in decision-making roles like portfolio management roles. My dad used to say this thing because I used to ask him, like, when he gets paid on the 27th of the month, he used to work at Transnet, he gives all the money to my mom. And we asked him, like, why are you giving the money to my mom? Because we're 7 boys. We're asking him. It's like, no, women have an ability to multiply things, and they will interrogate anything that you say. And I think it's very true when you look at the investment teams that are successful is that engagement. The benefits of diversification is that engagement, the risk management that comes in when you have different views within the investment team. So it really enhances our investment processes. And the other part is meaningful ownership. And I'm going to finish off with this one. And then the other one is transforming our value chain and also being active stewards for the investing companies that we invest in. It's difficult for us to engage a company in terms of their diversification if we don't have diversity within our boards. But the meaningful ownership is very critical because that's where you align the interests of our clients and of our shareholders and those of our staff. So we've been very particular about how we as the Old Mutual Investment Group increase the ownership of OMIG shares through our staff in a diversified manner. Because others can go partner with a BE partner, but we thought the people that work the business actually should be the ones. And we've been able to achieve that journey throughout.
Yeah.
Throughout the 7 years.
No, thanks very much, Onele. So, Onele, you talk about the very much big green machine.
Yeah.
But Ngareng, just quickly with you, they've got a number of resources. How, with limited resources and having won quite a very, very contested and particularly category of asset managers sitting with less than 10 billion in assets under management, how can smaller and emerging managers lead the change with limited resources? Obviously, the resources that Onele talks about will probably sometimes some of the asset managers will never see in their lifetime.
Yeah, yeah, for sure. And I think there is, though, a bit of advantage in being our size. We obviously aspire to reach these levels, but over time, for sure, we'll get there. But at our size right now, you're able to be nimble. And so decisions can be made quickly. You can, and what I've liked about our current team is that we have to double hat and sometimes triple hat. And what that does for a young lady who recently joined us, she's an analyst in the team, she gets to work on various projects for the business and isn't just kind of pigeoned into research. And so that's a different kind of mentorship, but it's mentorship nonetheless. And myself and our Chief Operations Officer, we get to mentor across that full value chain, and we have to be present and deliberate and avail ourselves in that mentorship. And then also we've opened ourselves up to start having a conversation about partnerships. Do we want to look at an OMIG, for instance, and say, and go chat to the guys and say, listen, we want to we want to expose our team to start looking at global shares. And we want to partner with you in that skills transfer. And you need to open yourself up to those conversations. And that's a lever of resources. It's not financial, but it broadens our pool of resources because now we can leverage off that big brother relationship.
No, thanks for that. Just last comments to my panelists, just commenting with yourself, Lonaba, in under 30 seconds. Just last comments in terms of the way forward and how important policies that are put in place by organizations are important.
Yeah, no, maybe I can speak to our journey and dovetail on policies and on their importance. What I would say is that, being purpose-led helps you a lot in then understanding and having the right DNA, and then making the right decisions on what policies are you going to have and how you're going to implement them, so that the policies don't just live on paper, but they actually have a life. And then I would say another important aspect of that is then bringing accountability within the team and holding them to account for what you've then put in place.
And your last comments, Onele?
My last comment, I think one of the issues of transformation, I think what's important, what we're proud of at OMIG is giving people the responsibilities and the respect that they deserve. And we just make sure that you create organizations where everyone from different backgrounds can come in and they can thrive and they can be given the opportunity and the airtime to succeed. And we've seen those outcomes.
Dr. Manus, where to now for Argon?
Steering
a ship for a number of years through some difficult times. How do you pass on the baton to continue with the work that you and your team and your colleagues, as you call them, have started?
Yeah, indeed, yeah. So, of course, one is to have a succession planning that makes sense. The plan has to be there solid, robust, and continues to interrogate it. And what I like is, I did mention the center having to hold the board. So being, having the board that holds us to account. Each time going to the board meeting, we need to thresh out those through the SEC as to where we are on that. Pushing again for looking beyond scorecards. For us, it should be not the letter, but the spirit. I'll close by, I mentioned this yesterday to other colleagues, that we look at the King 5 code that is, IODSA, Institute of Directors SA, is unveiling tomorrow, actually. And it's amazing that the word Ubuntu, I did mention that that's in our core values. Ubuntu is actually cascading through there. So it shouldn't be so much about compliance, box ticking, but it should be something that is more of the spirit than the letter. And for me, that's what we are pushing in our organization.
No, thank you very much to my panelists this morning. And what we have heard, particularly from the four individuals sitting here this morning, is that it's more than words. Transformation, gender representation is all about action. It means confronting the gender underrepresentation that we do have and are facing within the South African industry. So I think just to end off, we just want to say thank you all for this morning for joining us. But I just want to highlight to the team that have been quite instrumental in the research that you are viewing this morning, to say thank you to the 274 team, starting from Simpiwe to Mix, the team, Kwezi, 274 team, both on the public markets led by Fatima, private markets led by Rory Ord, and all that have been instrumental, and most importantly to our cover girl, Matilda, who made the cover this year in our annual survey. So please very much engage with us, and please download the survey at 274.com. And thank you again for your time this morning. Have a blessed day.